This has not happened in over 6 months for Tesla stock. That is, Tesla actually being above $200 per share. Now, I know what you guys are going to say. Tesla stock is down 0.5% at the time of recording this video, and by the time you guys see it, Tesla could be above $200 again, or it could be down 3%. That's just how volatile Tesla is. But today, the rally that you've seen in the beginning part of the day really shows a lot, and I want to discuss that here in this video. Not to mention all of your Tesla stock breaking news, option activity, what happened in the markets today, and much more. So first up, let's start with the fact that Tesla actually got above $200 per share. We've went through this cycle for many months now where we found a lot of resistance around 188. For whatever reason, 188 was a big level of resistance for a while, and then 200. And we've really struggled to get above 200 in the last 6 months. You did briefly here towards the end of February get above $200, and then you've seen a couple big down days, and that sent us back to the lows, right? At $138.80 per share. Psychologically, I think what we've seen today for Tesla was big. Now, there's really no rhyme or reason why Tesla got rejected at the high of the day today, around $203 per share. I do think to some degree Tesla was starting to get a little overextended, but Tesla now getting above $200 per share shows me that big money is starting to position more into Tesla. The environment going ahead is starting to become more favorable for Tesla, and expectations maybe can start to get a little bit better from here. As you guys know, heading into 2025, your EPS growth rates are really going to explode. Tesla should be able to generate over 100% year-over-year EPS growth, and that looks good from a more fundamental basis, but especially heading into August 8th, that is your big event. That could, as Morgan Stanley says, Adam Jonas, cause a re-rating in Tesla and really force Wall Street to start paying attention to Tesla's AI endeavors. And it's been a while since I talked about this, but eventually the hype will turn from the GPUs to the actual real world providers of AI. For all of these companies spending billions of dollars on GPUs, for NVIDIA to continue to be successful, there has to be software applications, real world AI applications that are actually successful. Wall Street will start to change their AI hype or hopium, whatever you want to call it, from the GPU providers to the actual real world AI providers. And August 8th is going to serve to be a huge day for just that. Now, as rates do start to come down, obviously there's the fundamental case for Tesla. Tesla should be able to sell more vehicles. Margins should improve upon that. And the faster the economy slows down, the more cuts that we ultimately get. And there will be a freak out moment. There will be a moment that Wall Street says, oh my gosh, we're heading into recession. This is bad. It's going to get worse. There's going to be that moment. Don't get me wrong. But afterwards, I do think Wall Street will look around and say, Tesla's in a much better position. That rates are lower. You're heading into robo-taxis, which who knows? Elon could say 2025. He could say 2026. We're expecting some kind of start date for the robo-taxis. And when you mix those two factors together, I see very bright days ahead for Tesla, albeit consider that Tesla's still down over 50% from its all-time highs, and it really hasn't seen any love in a couple of years. And I do think that will change. Now, in the near term, July 2nd's delivery number could go either way. I want to be honest with you guys. I'm optimistic that it will be a good number. The real number to be watching is the IR, the investor compiled estimates for Tesla deliveries, because that's what investors are actually expecting. And I think Tesla will beat that number, because I think it's going to come in at like 410, 415,000. I think Tesla can come in with a 430, 440 plus thousand delivery number, and that will be good, at least here in the short term, in my personal opinion. And it will show a month-over-month acceleration in growth, although the year-over-year numbers will still be negative, because last year in the same quarter, Tesla delivered 466,000 vehicles. But again, just circle this back to interest rates. Considering the environment that we're in, with rates as high as they are and financing anything as unaffordable as it is, I mean, if you start to get some rate cuts, I think that means estimates can go higher as well as margins. So from all of these different standpoints, that's very exciting. But to actually see Tesla stock breaking above critical levels of resistance, like $200 and recently $188, it's a very good sign that more capital is positioning into Tesla. Now, at the same time, Tesla started to slide. The broader markets have started to slide as well. Some of that has to do with Nike. Some of that has to do with bond markets today. Some of that has to do with the obvious data that came out that is showing the consumers slowing down a little bit more than we thought. And we'll get into that in just a moment, but I still think after we do get this Fed-induced error, this crash, which I think will ultimately happen, I think on the other side of that is Tesla stock doing very well. Now, I don't think Tesla is going to fall that much, especially if we're in the 180s, 190s. By the time that happens, could you reset back to the 150s, 160s? Of course. I don't think we're going to hit a new low unless something were to dramatically happen, meaning I think we're going to stay above the 140s, probably above the 150s, even when that crash event does come. And again, historically, when the Fed cuts rates, the S&P tends to fall about 23% on average. That's because the Fed normally always cuts because there is a problem. And if we take a look at the data that we got today, it was kind of mixed in the grand scope of things. Last month's PCE number was revised from 0.2 up to 0.3, and we came in at 0.1% today, along the lines of the estimate. So that's actually a little bit higher if you consider last month's revision. Personal income came in a little bit higher as well, as 0.5%. You were expecting 0.4%, and last month was 0.3%. Personal spending month over month, this is not a great number as well. You were revised lower from last month from 0.2% down to 0.1%, so not great there. And you only came in at 0.2% month over month, which was lower than the 0.3% estimate. So from that metric, the consumer is really starting to slow down what they are spending and getting really selective. You can even see that with Nike earnings and the guidance that they gave there. It just, did not help things all too much. Now, for whatever reason, I really can't make sense of this because the data was not great on the consumer side with spending. I guess if you want to net everything out, the inflation data was kind of negative because of that revision higher last month and coming in line with estimates, so slightly worse than we thought. But it is causing 10-year Treasury yields to go up over 3 basis points. But I actually think today was a little bit more, I guess, concerning on the growth factor. And typically when, you get more growth concerns, you get people that actually buy the 10-year Treasury, which pushes yields down. Today, people are selling the 10-year Treasury, pushing yields higher. And I mean, it's kind of weird. I wouldn't have expected yields to go higher based on the data that we got today. Tesla's option activity today, or at least the interesting flow sentiment from big money, is quite positive. You have 39 different trades totaling $12.01 million with a positive order value of 75%. If you take a look at today's expiration, open interest on the call side about 72%, open interest on the put side of 28%. Volume today, you're seeing about 2 times as many calls than puts, volume at 65.8% calls, and volume about 34.2% puts. If you take a look at the short position currently in Tesla, as I said in the last video, short sellers starting to get a little bit greedy here. Short interest of free flow at 3.82%, about $21 billion currently sold short in Tesla stock, and about 106 million shares that are currently short. In other economic data today, you did have the Chicago PMI that came in at 47.4. The estimate was 42, and this could also be a reason that Treasury yields are driving higher today, but I don't think that's as important as weaker spending and other data that we got The bonds are weird today. Tesla says today Elon Musk won his legal battle over his $56 billion pay package because shareholders voted for the compensation, despite a judge rescinding it earlier this year, according to a court filing. To be clear, the case isn't over just yet. Cybertruck owners who are not able to get power share are getting an additional $1,800 back. Look at this. This is pretty crazy. Tesla Semi is spotted with potential LiDAR suite to gather information to help Tesla's vision model. That is, I believe, one of the first times in a long time you've seen a Tesla vehicle with LiDAR on it. Ford says they will develop their next generation of electric vehicles at a new Long Beach campus. Ford plans to open the campus in early 2025. It will accommodate up to 450 employees working on designing a low-cost, flexible electric vehicle platform. Ford CEO Jim Farley has posted a new letter titled "Confessions from a Lifelong Petrolhead. I love electric vehicles and it has nothing to do with politics." Now, I'm going to save you the reading of all of this, at least here in this video, and just read the ending. He says, "I could say, quote, take it from a car guy, that electric vehicles are a great choice for many people, but you are better off trying one for yourself and making your own decision. What's more American than that? Who knows? You might just surprise yourself. I know I did." Tesla has plans to raise its game in the UK used auto sector, to expand the number of locations that sell its approved used cars and increase sales volume. Panasonic Energy is applying lessons from Tesla's Giga Nevada to its upcoming battery plant in Kansas. Panasonic Energy believes it will be the largest battery manufacturing plant in the world. Panasonic will produce 2170 cells at this $4.7 billion Kansas facility. As of the last week of June, the battery manufacturing plant was less than 50% complete, and the company aims to open the facility by spring of 2025. Tesla is moving forward with plans to turn the closed 119,000 square foot Winnetita Pacific Theaters building in Chatsworth into a delivery hub and service center. About 900 parking spaces at closed Winnetita Pacific Theaters will become Tesla car storage. And this is some pretty big news today as well. Tesla is planning to launch its first electric car equipped with an advanced autonomous driving system similar to Tesla's full self-driving for the Chinese market next year, one of its Chinese joint ventures said. We'll see if this actually happens. A lot of the time, these companies say this and nothing happens. Polestar said on Friday, after months of delays in turning in its financial reports, that its 2023 revenue fell and its losses widened as it grappled with slowing demand for its higher-priced models. Polestar reported revenue of $2.38 billion for fiscal year 2023, down 3% from $2.45 billion from 2022. The company reported a gross loss of $414 million for the year, compared with a gross profit of $98 million a year earlier. Tesla now has 200 supercharger locations in France. Here today, over on StockTwits, sentiment for Tesla is bullish at 55. Yesterday, it was bullish at 72. So a little bit better numbers here. Message volume today is 58, which is high. Yesterday, it was high at 63, so a little bit higher message volume. And the participation ratio today is at 54, which is in line with where it has been in recent days. Google Trends data for the Tesla lineup does show the Cybertruck at 70, the Model Y at 27, the Model 3 at 23, the Model S at 10, and the Model X at 8, which is falling a little bit, but still very strong overall numbers. Over on Google Trends data, full self-driving is hitting a new recent low at 20, which is still higher than any other period you have seen in the last couple of years. So overall, falling a little bit, but still very high, suggesting the take rate is probably much higher now than it was before, and hopefully we get new information or clarity from Tesla on Tesla's upcoming earnings. Global inventory numbers today are falling like a rock. The Model Y at about 4,100, the Model 3 at 3,600, the Model S at 2,700, and the Model X at about 3,100. Tesla continues to run about 4,000 different ads with Google. Today, CNN's Fear and Greed Index is neutral at 45. Yesterday, it was neutral at 46, so a little bit more fear out there. it does seem like really concentrated in some of your selling in AI stocks like SMCI, that's down over 5%, Nike down 20% today. Those are very abnormal moves, especially for Nike. The last time Nike moved 20% was like 10 years ago. It's been a very long time. Now, you can actually see, though, the breadth on our markets is getting a little bit better today. The percent of stocks above their 50-day moving average is up 1.84% today. So 1.84% of all stocks are breaking above that 50-day moving average. Still about 56% of all stocks are currently in a downtrend below their 50-day moving average. So it's still not the strongest market, but the last couple of days have shown a little bit of improvement, especially as Nvidia and some of your other big tech stocks sold off a bit. That has caused a little slight rotation into other areas like value in our markets. And I'll tell you right now, that's what Wall Street guys are starting to say. They're starting to say 12 months from now, you're going to be slapping yourself if you did not buy value now. And that's kind of what I'm looking at. In a weird way, Tesla's not necessarily considered value, but given it's fallen so much and the expectations are in the toilet, one could argue that Tesla's a better value now than it was before. Tesla stock is currently down about 0.68%. Tesla is at $196 per share, still strong. And I said this before here on the channel, I believe in the last video, I am expecting a down move at least before July 2nd, simply because the delivery numbers probably not going to wow people, right? And if we rally into that like we already have, then it wouldn't surprise me to get a day or two of selling before that July 2nd number. In fact, that's probably better if we do see a little bit of selling before July 2nd, because then you're pricing in maybe a not great number. If we just were to rally, right, and stay above 200 heading into July 2nd, the odds are greater that you do get a fall following that number. Now, if you take a look at the RSI today, still looks pretty dang good at 64.44. And if you take a look at the MACD line, that is almost at 5, and the signal line is at 3. So also showing some good trends there. So that's important. Now, if you take a look at TLT today, down 1.22%, bad day for TLT. If you take a look at the dollar, that's pretty much flat. If you take a look at oil, that's down 0.5%, although recently oil has started to rise, could lead to a little bit more of those inflationary pressures. So let me know what you think about all of this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day, and I will see you in the next one.